Welcome to the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. We are also together on unfilteredinvestor.com, where we take some of these topics we talk about on Trader's Edge and break it down more granularly on the. I don't know why I kind of lost my train of thought there. We're not live, right? We could just start over. Oh no, we are live.
Yeah, we're
okay.
live. Yeah.
Oh, I love live TV. So, how did you survive the government shutdown today? You okay?
Yeah, I'm fine. Everything's good. As a matter of fact, two of the stocks I had, I went in my direction, so I'm good with it.
Oh, by the way, and guys, you who watch us for a long time know that I don't give individual stock recommendations. My licensing is all for futures. And I'm just saying to Bobby, and you guys are here for the conversation, I did buy Palantir today. One of the guys I really like, Keith Kern, who's a great chartist, who I'd love to actually get him on the show, but I don't know if he's a talker like we are too. But it looked good to me. Did you look at that chart today? It looked like it was breaking out a little bit.
Doing it right now as we speak. No, I have, so I have my individual stock account, right? Mm-hmm. By the way, at first glance, it does look good to me, but yeah. I have my individual stock account and I have a limited amount of funds in there that I'm allowed to do individual stocks with. By allowed, I mean by my wife. Yeah. So I basically had all of my margin used up over the last 2 days. So I don't look for anything else, because if I find something, I'm going to get out of one of the other trades early, get into the other thing, and inevitably the one I got in is going to go bad and the one I got out of is going to continue to move.
Good. Anyway, well, I like the chart on that. I did not buy a lot. If it continues some strength above today's high tomorrow, and it fit most of your criteria, I think, as far as the 821. Yeah,
it does. It is not, and it's got a very simple stop too, below the low of the 25th.
Bingo.
Which currently leaves it with a double top. So that would be a very comfortable stop level.
Yeah, that's what I intended to do. And I always kind of wanted to have some level of position in it longer term. So I'll stop out of like 3/4 of it below there. Anyway,
can I say something before Brian comes on?
Sure.
For anybody that wants to keep me updated on the Cubs score, the person who does it the cleanest and the best will get a free meal at Brant's of Palatine on Jimmy.
That's true. You can. It's 1-0, bottom of the third right now. I get the free meal.
You're getting the meal.
Yes.
Amazing.
But by the way, so what I sometimes say here, and I will say it again, is you guys have been watching Bobby and I on TV and different media for 20 years. You might think we're full of shit. Quite honestly, we think we're full of shit sometimes, not all the time. But one thing you cannot argue is that for some odd reason, some of the highest end guests come on. We're about to bring on Brian Westbury, the chief economist for First Trust, who I happen to think is the premier economist that I read anywhere, bar none. So let's bring on Brian Westbury. Okay, this goes to both of you two first, before you say anything. Running away from this city like the cowards that both of you are. Today is one of those days. The Cubs won a playoff game. It was 75 and sunny. The Loop is filled with people in Cubs gear, having fun time. Both of you have to be kind of jealous of a day like that in Chicago, correct?
Correct. Shot over the weekend, 4 dead. No.
Well, yes, I agree about that. But, I moved to Denver 3.5 years ago, and we were purple then. Now we're just blue. And
I blame you.
Our baseball team stinks.
Right.
So it's actually worse than the White Sox. So it's like, anyway, that's
what's funny, Brian, is one of the reasons I chose Florida over Texas was Florida was purple. Now it went the right way. But I spent so many years in Illinois with my vote not mattering at all. And I come down here, I'm like, cool, my vote's going to matter. No, not much anymore.
Right. That's right.
It went the right way.
Yeah. The reason I moved out here is because there's a lot of trout streams out here, and I love to fly fish. And I have property on the Colorado River, and that's why I moved here. Also to get out of Illinois. But the bottom line is, this state has gone straight downhill since I got here, and so I try to spend. I'm looking at Florida now, by the way.
Do you put your float boat in at the pump house at Kremling and then float down the river and fly fish?
Yep.
We do that. I've done that 100 times. I love that.
Well, next time you go by Radium, stop in.
That's
Big American flag.
Jump off the boat. Right?
Jump off the boat. Come on in.
Okay, we're going to get to Marcus. One last thing I will say about sports, and this goes out to my younger daughter, who forever thought she's not a sports fan. big cities, when the team starts to do well, you can understand why sports are important. They're like a lifeblood. They're a heartbeat of a big city. And Chicago so gets excited for the Cubs and the Bears. And I cannot remember the team that plays on the South Side, but whatever they are, they seem fine too. Yeah. Anyway, markets, Brian.
Two of my greatest memories in life was Michael Jordan's run with the Bulls, and then the Hawks. And it's a magical city when that stuff is going on.
There's no question about it. And how lucky were we with Michael Jordan just to have those 14 years when we were kids all living in Chicago? Jesus, for people outside of it, you used to schedule your entire social event, even in a regular season game. Oh, the Bulls are playing that night. We can't go to that party, So it was amazing. Anyway, the government shut down today. I don't know if you heard. So are we all dead? I mean, Larry Summers said tens of thousands of people are going to die. He literally said that. So what's your take on the government shutdown so far?
Yeah, the market doesn't care. I don't care. Actually, I'm really happy about it. The best thing is that the Democrats took a position they just want to spend what they believe is that Biden never lost. So that they just want to take everything we did during COVID under Biden, the Inflation Reduction Act, the massive $2 trillion spending bill right when he got in. He had two of them, and go right back to him like nothing changed. That's what they want to act like. And I just love the fact that Russell Vought and working for Donald Trump has come up with ways to use this to get rid of more bureaucrats. And also, I don't know if you saw today, but they're going to cut off $20 billion of funding to New York City for a subway and another train between New Jersey and New York City, and so they've just kind of left themselves open to this. And I think in the end they'll come to the table, but I hope we can get some things done, shrinking the size of this government before that happens.
But it is just crazy. And to underscore your point, like literally we had an election and it was a referendum on these things. It was in the financial world, it was a referendum on spending. I know a lot of it was a referendum on immigration. I know that was somewhat too, but they, like you said, they don't think they have to slow down spending at all, despite the fact that they got their asses handed to them at the ballot box. That is just, it is completely ridiculous to me. Let's talk about the economic data that came out. So ADP, which by the way, ADP came out today. I believe that people were watching it a little closer for the two reasons. Obviously, because there's been problems with the BLS data for the last couple of months, last couple of years. Secondly, BLS data we're probably not getting it on Friday. So could this be a little bit more of a permanent shift to the private numbers like ADP and JOLTS away from the bullshit?
Yeah, yes, I'm going to agree. I'm going to agree with that partly, but I think there's just as many problems. We have 330 million people in this country. It's 3,000 miles from corner to corner, not counting Hawaii or Alaska. But it's really hard to measure. And I do agree ADP has a great database, if you will, because they do so much of the payroll processing, but they're going to have problems too, because we just went from 3 million immigrants a year to basically zero, like overnight. That messes up all these population numbers, everything that you have to use to estimate the number of jobs. And so I think you kind of need it all to give you all these pieces to get a feel for what's going on. But actually, let me talk about that big revision we just got, because last year, so in August of every year, they release the preliminary revision. So this is crazy because they don't do anything with it. They just give you the number. And it was 911,000 fewer jobs. Then early next year in 26, they'll go back and revise the numbers from March of 24 to March of 25. And if you do the math, 911,000 jobs revised downward is 75,000 jobs a month on average. Well, we only had 150,000 job gains last year. Now it's going to get revised per month. Now it's going to get revised down to 75,000. In other words, they cut it by 50%, which is just amazing. And if we take out government, and then healthcare, which is mostly government, and then social assistance, which is mostly government, the private sector jobs actually declined. And then we get, like in between March of 24 and March of 25. It's just amazing. The economy was a lot weaker last year than people thought, if you believe this data, that the revision that we got. And then we see that not only did this month decline in the ADP number, but the previous month as well. And so we're going to go there, I know, but I am amazed that this stock market is so strong, given the fact that there's a lot of underlying weakness in the economy.
All right. So real quick, before I ask the question I have, I'm going to put up some comments, or I'm going to ask Luis to put up some comments. First one is from our buddy Remo, who said, what Democrats? They're all socialists, which I like. The second one is, he said, let's talk gold, which is actually what my question is.
Yep.
And then I want to put up Widge real quick before I do my question. He says, the unwillingness of Democrats to get better is the enabler for Republicans to get worse. I absolutely love that quote. The next thing I want to do is I created an award that I'm giving to Jimmy and me for calling the gold long, both of us, in about November of 2022. Luis, can you put this up? Jimmy, you and I are each getting a blown up picture of this to put on the wall. It's basically me wrangling a bull market. That's my actual.
I have to hang a picture of you wrangling a bull market on my wall.
That is my actual physique. Just for people who don't know, that is actually what I look like without a shirt on. All right, that's enough of that tomfoolery. I like being old too, Jimmy. Tomfoolery. You're a fan of gold as a monetary anchor, if I remember right, more as a store of value, but not as an investment. So I'm assuming you think where gold is now is it's like wildly overvalued. Is that correct to assume?
A little bit.
Okay.
If the way I look at commodity prices is I compare them to other commodity prices. So if you do, how many barrels of oil can you buy with an ounce of gold? That number's right now is through the roof compared to history. So that tells me that, it might be a little bit overdone. Having said that, I fully understand this. The Fed is out of control, and they have been since 2008. And then here we are with negative job numbers and inflation above their 2% target. They're between a rock and a hard place. They don't know what to do. And everybody assumes they're just going to cut rates because the jobs number will come first. And then we're back in the 1970s again. And the only other thing I would say about the value of gold is it seems to be looking way down the road. Like I never know whether gold's looking at inflation today or 2 years from now or 6 years from now. And it seems like it's looking 6 years from now. And it probably is right. And unless we reform the Fed, we're going to have an inflation problem that doesn't go away.
See, here's what I think that Jay Powell believes, and tell me if you think I'm crazy or he's crazy or both. I think he believes that come 2026, AI is going to fight inflation from a productivity standpoint. Right. I believe we're already seeing that in some areas. And I think there's plenty of things that are fueling inflation, the Fed being one of them. But I think AI is going to kind of gear up to fight inflation. I think that if Donald Trump comes through with some deregulation, some better business climate, yes, it is stimulative, but it also fights inflation from the supply side by giving people the confidence to produce. Do you think Jay Powell thinks those two things are going to be fighting inflation in 2026, or do you think he's just off his rock?
I really think that he just thinks when he thinks about Donald Trump, all he can see is tariffs. That's it, and he thinks tariffs are inflationary. And there's some evidence right now. I'd say some slight that AI may be lifting productivity a little bit, but I don't think the Fed's latest forecast for GDP in the next year is 1.8%. So I would say their economists don't see it, and therefore he's probably not looking at it. And then at the same time, he hates having all this pressure from Trump on him. And so, I mean, it's kind of fun watching because he hates it. He doesn't want to cut, but he's probably going to end up doing it because I think underneath it all, he just wants to last until the end of his term, and doesn't want to get fired, and he's worried that it's going to make him look bad in the history books.
No, I think that is very, very interesting. So now let's go back to September through December of 2024, when the Fed cut 100 basis points and 10-year yield screamed from 3.6 to 4.7. To me, that was a clear indication that the market was pointing at the Fed saying, you guys are wrong. Inflation is staying. Okay, now fast forward to here, 10-year yields are easing their way down. Today, 409 after the crappy labor number. Is the 10-year giving the green light to Jerome Powell to ease right now?
A little bit, yeah. We should have a steeper yield curve. I mean, it shouldn't be this flat. Look, I don't think the Fed's. Like I said, I think the Fed's blown it. I think they've screwed things up since 2008. They caused the inflation that we saw. That it's all because of the Fed. Having said, I also think inflation's not down to 2% yet. But if you take the existing rate of inflation, and remember, there's 30 measures of inflation that we have. You know, the median Cleveland CPI and the PPI, all these different inflation measures. It's somewhere between 2.5% and 3%. And the Fed funds rate's at 4.25, which means the real funds rate above inflation is higher than it has been since 2010. So I think they have room to cut. I think they should cut just because the real rate, it's not super high, it's not recessionary high, but it's on the higher side from what we've seen over the last 18 years.
Is room to cut a reason to cut, Brian?
Not necessarily, but when you have a negative jobs number, what choice do you have, right? That's the way I would kind of look at it. I wish I could roll them all the way back. Well, I know. Thanks for that for a second, though, because I wish I could roll this all the way back. This is why I'll never be in charge of the Fed. But if I were ever in charge of the Fed, I would start talking about the gold standard. We need a rule, something to tell us. And if you pay attention to gold, and it's telling you don't cut, I wouldn't today if that's what I was looking at. But if I just look at the CPI and think about the way the Fed operates, they do have that room, is what I would say, because they don't look at gold. They don't care about gold. They should, but they don't.
So do you think they're actually hamstrung by their mandate? Because they end up talking about, they get questions about things, level of asset prices, gold, Bitcoin. And Powell always says the same thing, which I kind of respect him for doing it. He says, that's not really in our purview, so we don't look at it. You've been in those rooms with some of these people. Do they actually not talk about that stuff, or do they just not say it publicly that they talked about it, but you know what, we're not supposed to be talking about it?
Yeah, I mean, people will bring up gold, but if you talk to a top economist at one of the regional banks, or one of their top economists at the board in DC, they won't engage on gold. They will talk about asset prices, and because they believe in the wealth effect. So stock market goes up. So now they've got a problem. If you start talking about the wealth effect, stock market's up, people have more money to spend. That means consumption's going to go up, but at the same time, jobs are going down. So this is what I mean by they're stuck between a rock and a hard place today. Inflation's not 2%, stock market is screaming, and jobs are going down. And if they blame all that on tariffs and immigration, We live in the craziest world right now because we could go back to the Great Depression, right? And everybody blames Smoot-Hawley and that, but we didn't. We were still immigrants were coming pouring in the 1920s, and now we stopped them at the same time we have tariffs. So and we're shutting down the government, and we are not raising tax. It is one an AI. I mean, like I could list, about 20 things that when you put them all together, there is no time in history to look at a period like this. And every time you bring up one force going that way, you can bring up another force going the other way. And and I guess markets are always like that. You guys live in the market, so you know that, but they're always like that, but it just seems more complicated today than I can remember it in my career.
Okay, so maybe that's a wrong time to ask this question, but first I want to read Widge's comment here. He says we're looking at a nominal growth rate in the 6% range, cutting rates. Now, Brian, just so you know, Widge is a regular viewer of the show, and he is constantly saying we shouldn't cut rates, we shouldn't cut rates. Right. And he's also a very, very smart human being. So on top of that,
you don't know he's a human being. He's never showed us a picture. He could be a bot.
Yeah, I mean, he could be
not. He could be you're a smart bot. Right?
Could be a furry, a cat. I don't know. We're looking at like the 230s is steeper than the 3-month 30-year curve, right? The 3-month is 40, 50 basis points in yield above the 2-year. Right. If you're aggressively cutting rates, is that a way to get the steeper curve that you say we need, or is it just bad medicine at that point?
It would be, and in my opinion, the curve would steepen if we do that. To go back to this nominal growth idea, this is a model that I use to judge the level of the federal funds rate, but I don't use this quarter that the third quarter is probably going to be close to 6%, like Widge said. But if you look at the past 2 years, it's 4.5 to 4.75%. And I think you have to use that 2-year average. I don't think you can just go off one quarter. So now at 4.5, 4.75 is still a little bit above the federal funds rate. But using the 2-year average of nominal GDP, the Fed's really not that easy. So I don't like using that 6% number. If, like I said, though, if you believe in gold, you wouldn't be cutting. If you really think inflation needs to come under 2% before you cut, you shouldn't be cutting. But what do you do with a negative 2 months in a row of negative job growth, plus last year where it looks like private sector jobs outside of all that government spending were down too? And so and by the way, we don't have enough time to do this, and I'm hesitant to go too far down this road. But when I say the Fed is broken, back in 2008, they completely changed the way we manage monetary policy. Completely upended it. We had been doing the same thing since basically 1913. And that is that they managed the reserves in the system and they kept them scarce. And banks traded federal funds every day. They traded federal funds. When we did quantitative easing, we exploded the amount of reserves in the system. We went to the abundant reserve model. And now banks no longer trade federal funds. Banks do not have federal funds trading desks anymore. So you kind of have to ask yourself, where does that interest rate come from? And the answer is the Fed just makes it up. They literally make it up. It's price fixing. And it's one of the most important financial indicators, interest rates in the whole wide world. And they just make it up. And we keep debating about what level it should be. But I think we need to bring how much M2 is in the system into the debate. It's not just interest rates; it's whether money is growing or contracting, and so now we have two things that we have to watch. And in the end, I wonder, how much interest rates really matter. So, for example, Bernanke held the Fed funds rate at 0 for 7 years, and we never got inflation. Powell only held it at 0 for 2 years, and we got 9% inflation. So is it really interest rates that cause inflation? Because if 2 years caused it, why didn't 7? And the answer,
I have an answer, because during the 2 years, we also absolutely exploded the amount of money we were throwing into the system due to the COVID relief bullshit. And there was a massive supply shock globally that kind of was a match that lit the fuse. Now, I believe in Milton Friedman, and I believe in Brian Westbury, and I believe that that inflation is always everywhere a monetary phenomenon. But it does get help and get buttressed by certain things, and those two things seem like a pretty big deal. No,
they do, but go back to Bernanke. One of the things he did is he flooded the banks with reserves, and then he hammered the banks with new capital requirements and liquidity rules. So he wouldn't let them lend them out. And so then under Powell during COVID, you're absolutely right the way you described it, but I would add one more piece to that, is that we paid the banks to make all those PPP loans. In other words, not only did we do QE, but we also increased the money supply by allowing we cut liquidity rules so that banks could make all those PPP loans. So during Bernanke, M2 grew 6%. During Powell, it grew 40% all at once, but 6% a year during Bernanke. And then during Powell, it exploded. And I think that's where the inflation came from. You're right. We had supply chain problems. You're right. We spent all that money. But the M2 money supply accelerated massively during the 2 years of 0 rates under Powell. But it grew 6%, which has been the 20-year average under Bernanke.
Yeah. So before I'm going to cut to the commercial in 1 second, Luis, I want to say something about the PPP, whatever my restaurant got like close to 200 grand for it, because we were going to close down, but that kept us from not closing down. And people tried to shame me on Twitter, and I kept saying,
I remember
you should do a little research on who I am.
Yeah.
I would have taken 10 million and still complained about the policy because I thought it was a bad policy. Yeah, I did not make the policy, but as long as I'm playing by that game, I will take as much as they will give us. Luis, can you put the banner up for the quick commercial? So you guys have been watching us a long time. We appreciate it so much. Thank you for joining us. You can do us a favor, and it'll end up doing yourself a favor as well. You can scan for 3 months free to get Tradier Pro. It's an options trading and analysis platform. We talk to options traders who have been doing it for decades and others who have just begun, and they all say the same thing about Tradier Pro, that it is the deal. It is the best one out there. Just scan the code. Try it. 3 months free. No obligation. Back, Bobby, I got a cough, so I'm going to mute.
So back to this whole thing about the PPP. Jimmy, I remember Jimmy getting completely like skewered. Of course, he doesn't care, which is one thing I like about him. Couldn't care less. I think one of the things that I'm going to go a little bit toward politics, Brian, if you don't mind.
Yeah.
And one of the things that I really liked about Trump from day one was, I think it was in the 2015 debate, he said, I have taken advantage of these tax rules. That's why I'm the best person to fix them. Now, we all know he can't fix them unilaterally. But I think a lot of that has left at this stage. Like he to me is not the home wrecker of an executive that I thought he would be when he came in. Now, I'm not saying he was going to drain the swamp. I'm not saying the Doge was going to do anything. But the spending, man, the spending bothers me. The injection and the trade for stock in companies, taking instead of ending the subsidies, he goes, no, we'll keep the subsidies, just give us stock. I wonder if Elon would have given him that deal for the government if he would have kept the EV subsidies in there, the tax credits. Right. Are you bothered by any of this? Am I the only one?
No, you're not. You're not the only one. I'm. Look, we shouldn't own 15% of all the sales of Nvidia, 10% of Intel. We shouldn't make a deal with Pfizer and like have the government get a kickback from that. I don't think any of that should happen. But at the same time, we have to kind of balance this a little bit with the fact that uh, we got rid of, well, what we did was for the CAFE standards, the average fuel economy for cars, they just said we're not finding anybody. Like they're not in force, right? Because they have to wait for Congress to fix it, but they could say we're not going to find anybody, and that's what they did. Uh, Light bulbs, dishwashers, like ovens. Remember they were going to take away our gas ovens,
I
like
do.
all that stuff. Like, yeah, you were going to find Jim's restaurant for using one or whatever it was. He's fixed all of that too. And then we've already laid off 87,000 government workers. There's about 250,000 on furlough. It's before the shutdown. Now it looks like they're going to go after more. So I guess what I'm getting at is that it's not all bad. And if I look at it all, I'm not going to say it balances out. I wish we weren't doing those things, but at the same time, he's doing a lot of things that are the opposite. So when everybody says we're Chinaizing the economy, or however they want to describe it, right, I'm like, well, we've been doing that forever. I mean, in the 70s we had wage and price controls. I mean, we had, we regulated the snot out of energy in the 70s, subsidized solar under Jimmy Carter. We've been doing this forever. Trump loves making deals. I wish we didn't have ownership in that stuff. And I'll say I wish he didn't do it. I don't like it, but at the same time, it's not all leaning in one direction.
I would say this is that guys like us, you particularly, who are a little more visible, we have no problem criticizing different policies that Donald Trump advocates for. But at the election, it wasn't about just a referendum on Donald Trump. There was a binary, if I remember it correctly. So all Trump had to be was better than the people he was running against, which I think is, right. I would crawl over glass to vote for him again. And I've been critical of about 60% of his economic policies so far, which is more than I thought I would be. But again, I am perfectly comfortable with him being there. I just wanted to interject that real quickly.
Yep, I agree.
Bobby?
So let's move into today. We saw NASDAQ being the strongest of the four indices. Wasn't a giant rally, but we did get a new all-time high in the futures. I didn't look at the comp or the QQQs. I believe we got there as well. Actually, I could just look at that really quick. I looked at it. I had to do a little bit of an analysis for a client today on the NASDAQ. And I looked at it as sort of a flight to safety within equities based on the government shutdown, because you're not talking about defense. You're not talking about financial sectors that may rely on government flows, right? You're talking about tech, which kind of gets their revenue in a million different places. Is that crazy? I mean, I needed to get that done, and that's what I thought of. So is that a stupid thing to say?
I don't think so. I mean, Jim might, but I don't.
I think everything's crazy if I don't think of it.
But I don't at all. I do. We haven't gone there yet, but I'll take this opportunity, and that is every metric I look at. I mean, I want somebody to show me a metric that doesn't say we're overvalued. Price to sales, price to earnings, the 10-year moving average of trailing earnings, PE, the stock market cap to GDP.
I'll give you one metric, Brian, if you let me.
Yep.
Price to the amount of M2 over what it would have been had we just kept on the path from 2008, which, by the way, was ridiculously steep sloped, increases in M2. There's an extra $3 trillion out there, and it's showing up in stocks, right?
Yeah. Yeah. Well, that's absolutely right. And I guess the one, people use this in the opposite way that I'm about to use it, but because gold is, if you discount the S&P by gold, it's not high. And I just use that same analogy with gold to oil, right? And so I get, all right, there. I gave myself one, and you gave me one, Jim. All right, but still, I think this market is overvalued. For example, in our model, we include the 10-year treasury in there as the discount rate. It would have to fall to 2.85 to make the market fairly valued today, or earnings need to go up like 30%, like right now. yes, they could go up 30% over the next 3 years, 10 a year, but we're already there. And so I think we're ahead of ourselves. And then, I'd love to have you try to talk me out of this, but I look at OpenAI, who has 13 billion in revenue, I think 40 billion in losses for this year, and they promised to invest 300 billion. And I'm like, where are they getting it? And the market just screams on this news. And so
I thought I was reading those numbers wrong. Yeah, you go.
That to me is the funniest thing when Trump talks about it, and they're going to spend 8 trillion in the next week. They're going to do it. I swear they're going to do it. They promised they would do it. They said they'd do it. I think they'll do it. When he does that, and it's like, remember all the China soybeans? I mean, I get it, COVID and then a new administration, but still, China never bought those soybeans. So I'm not sure why anybody believes any of these investments are going to happen.
Yeah, I don't either. And that's where I do get worried. I think I understand AI. But what I've seen so far is my like, for example, let's look at Google searches. So we all used to go on Google, they all work the same way. And that is, if all of us looked up Chicago Cubs and then somebody wrote in Major League Baseball, Cubs would come up first, right? And unless the Yankees paid more to be first. And so we all knew how that search function worked. Well, that's sort of like AI. It's learning from all our patterns and then bringing the most popular to the top. And AI, I get it. It reads more, and it can go even further than those algorithms that Google first invented. But is Google going to sell more search using AI, or the same amount, or are they really getting that much? To me, the only way they're going to make money from this, unless search with AI doubles or something like that, is to lay off all the coders, because now AI can code itself to do all this stuff, and then they save money and make a little more profit. But in the end, I keep trying to figure out, like, how's it's not like bringing the railroad to cross country travel. It does the same thing that we used to do. It does it a little bit better, but not that much better. And
not to justify these huge price increases in the equity itself. And I actually agree with you on that too. And I'm long Google, and everyone who watches shows knows why I'm long Google, because I believe they're an arm of the CIA. Because I believe they're an arm of the CIA. This was my thesis about 7 years ago, is that, wait a second, you think Google's going to the CIA is going to allow somebody else to collect intel and data on people better than they do? So the only question in my mind is whether the CIA started Google in the first place, which there's some evidence of that with the Department of Defense loan, or they just infiltrated them. Either way, it is absurd for people to argue against me that the intelligence agencies aren't plugged into big tech generally, places like Google specifically, that are collecting intel. You don't think that's crazy, do you?
Absolutely not. I mean, I think that's why China will not touch NVIDIA chips.
Exactly. All over them.
Or the ones we said they could have. They couldn't have the best ones. They can only they're like, forget it. And
we'll tell you later. You guys use these ones. Okay, so let's talk about the investment themes of the next 6 months, of the next year. Bobby, this is going to be a question to you as well too. You've said, by every metric you look at, you think that the stock market is overvalued. I tend to agree. I'm still staying mostly invested, but it's a hedged long. I buy puts every big up day. Even today, I bought some puts. I think it's a liquidity issue. If you are not liking the broad stock market, are there sectors, are there things within the realm that you guys are advising your customers to construct their portfolio a little bit more towards? Well, Bobby, you first then. He's about to say, what was the question?
Yeah, that was going to be one of the question ones, because
I thought Ryan was going to answer first.
All right. I'll answer first. I'll answer first. I own stocks, and one of the places that I've really put myself out in is the private equity market, and so I've had access to. I'm sitting here talking about AI and wondering how it's going to generate the revenue to build all these data centers, and I own AI. All right, I don't want to talk about who and what, but I do, and I'm invested in the blockchain space through private equity investments and a bunch of it, and then on the tradable public traded equity side, it's been financials. Energy is I love energy. I loved it back when Biden was president, because I'm like, all these people think we're never we're fossil fuels are done. I'm like, I got to accumulate as much as I can while people think that, because in 50 years we're going to be using more fossil fuels. Even if Biden had his way, we'd still be using more fossil fuels in 50 years than we do today. And so I love that sector too. And so healthcare has been good. In other words, I'm more, if you ask me which, like, would I own a SPY or equal weight SPY, it's equal weight. That's what I want. That's what I want. Because I just think that 40% of the market in 7 or 10 stocks at the valuations they are just doesn't make sense. And so I want more fundamentally weighted products
And Robbie,
that
before
look at value.
Because I want your answer to that as well. But I'm also in nuclear, UEC,
Yep.
NLR, and
Yep.
NLR might be, NLR is the ETF. And I think, again, when we talk about these data centers, we talk about Bitcoin mining, we talk about all the shit. This takes a lot of power. Bobby, what do you think about that question?
So I still like commodities a lot. One of the things that I struggle with is trying to find a reason to sell commodities. I can't really find one. Okay. Either we get inflation, good for commodities. We get a ramp up in the economy, good for commodities. I don't see stagflation coming with a 6% nominal GDP and a 3.8% revision. So I don't see that. So I like commodities just in general. In terms of equity sectors, I don't really do that in my active trading. I do whatever works. So for example, Aon Incorporated is a buy signal we sent out today. So is Broadcom. Right. So you're not really talking about two companies in the same space. Long UNC right now is another one. Long Exact Sciences.
What's UNC again?
United Health.
Oh, yeah, right. Yeah.
Long Exact Sciences. So I really am always sort of looking for the stocks that set up correctly for an individual buy. Now, retirement wise, because I trade so actively, retirement, I'm about as conservative as a 59-year-old guy who looks 34 should be.
Yeah, I don't know any guys who fit that description though.
So, but that's basically what I mean. I mean, I'm pretty conservative in terms of what I'm doing on the investment side. Got a guy that runs it for me. He's more conservative than me. So I own a bunch of techs, but in the form of Qs, not in the form of individual stocks.
Oh, that brings up a question that I'd love to ask too. Mm-hmm. I'm starting to get really, really worried about decades of passive investing into shit companies along with great companies by just buying the indexes and the ETFs. I cannot for the life of me figure out how and when and what it looks like when it breaks. Have you put any thought into this at all?
Yeah, a little, but not I guess my one thought is that there may be crap companies out there that have just been along for the ride, but they are so small compared to the index, compared to GDP, compared to the total market cap. And when I think of the total market cap, it's not just the 5,000 stocks we have. I put all these massive private companies in there. I mean, SpaceX, I think their last round was $350 billion. And you got to throw that in there too. And then if you're talking about a $10 billion company, it's almost to me like the commercial real estate issue we have. Yes, it's happening, but the big investors in real estate in the United States are not the banks. It's these sovereign wealth funds from all over the world, Canada, Netherlands. I mean, they have hundreds of billions, like if you add up all these sovereign wealth funds of holdings in real estate in America. So they can take a downtown office building that was 400 million and it just sold for 60, and and they just write it off. And it hurts, but it's not a catastrophic event for the economy. I'm so glad we're out of this place where, remember when Greece was going under, and it was going to take down the whole entire world, and like every day we were freaking out about all these things, and none of them ever happened. And so I people are worried about the credit markets too, Jim, and defaults are rising, but we have this such a bifurcated economy where the top is doing so well, and that goes to exactly what you said. We're riding this wave of money, but the bottom isn't. And like defaults are up on student loans, auto loans, mortgages, everything. And then we're seeing some companies get in trouble that have these layers of debt out there. And I think we're going to have more problems in that area. The question is it big enough to cause some kind of systemic event? And I don't think so.
So you believe, so 10% of retail sales, of consumer spending, 10% of the people are generating 50% of the spending.
Yep.
To me, 60% of the population in this country has been in a deep recession for a couple of years, and the rich have gotten richer because the COVID relief was the biggest transfer of wealth from the middle to asset holders like us that we've ever experienced. It is absolutely ridiculous. So I don't even think you can judge anymore. Like, are we in a recession? We're not even we anymore. We're us. And then we're all the people who don't have assets, and all they have is beef and egg prices that are through the roof, and they're not making it paycheck to paycheck. So I think what we've done here is, like, to call it immoral and awful and toxic and destructive is giving it an upgrade, in my opinion. Any comments on that? Yeah. That's a good comment, Bobby.
The Fed did it. That's why I said
that. What cracks me up about that is we're the ones who get accused. I had a friend say to me the other day, friend of mine who's on the left, said, well, the fact is that Republicans care about money and Democrats care about people. I'm like, not anymore, dude. Like, literally not anymore. Like, the three of us should be cheering that, because we would be selfish assholes if we did, right? And we don't cheer it. We think this is the completely wrong thing that happened that benefited the three of us.
Right. Oh, yeah. And I'm not giving any money back, just to be clear on
everybody. Neither am I.
I've been given rules to play in this certain system. And I'm back when we're all in this together. I was never all in this together. I'm in here for me and my family, and then my friends. The whole thing was bullshit. We're in this all together. I'm going to take advantage of everything I can. Yeah.
And I think conservatives, for the most part, at least, I can speak for me, and I know I can speak for you too, is we've been telling people to save, to invest, to buy assets, to you spend less than you earn. That's the deal. And be personally responsible. Whereas I feel like the left is telling people not to be don't worry, take out this student loan. You may or may not do whatever your degree is supposed to make you do, but don't worry, we're going to forgive that loan for you. So you can just, have fun in college and enjoy it, because that's what you should be doing at this age. And don't worry, we'll take care of that debt later. It's just completely irresponsible. And that drives me crazy, Bob, that somebody would say that to you, because what they're saying is, by being responsible with money, you're actually showing your greed, or I think it's exactly the opposite. I think it's exactly the opposite.
Yeah. And we don't care. I liked my 200 grand that I got in PPP money. It was my favorite 200 grand of the year. Bobby.
Yep.
I want to ad-lib something here, because I'm always kind of like reposting our streams and stuff like that. And we've got over 1,100 people watching right now, Brian. But there's I just occasionally go to Governor Ron DeSantis's page to make Jimmy want to open a branch too down in Florida and live here. And he screenshotted an AP article that said Fed's Powell says high inflation temporary will wane. And the article apparently said that the Fed hasn't botched anything, because DeSantis put that in quotes with kind of an eye roll, right?
Right.
Somebody below that, called the sole voice of reason, son of Aristotle, I don't know who this person is, I'm not trying to disparage him, is replying to Governor DeSantis saying, you're not an economist, stay in your lane. The Fed hasn't botched anything. Its policy for the past 5 years has been textbook. Congress, Biden, and Trump caused the turmoil.
Well, that guy's all mixed up, isn't he?
Like, yeah, I don't agree with that, but I want to just give that to Brian. I think that's a ridiculous statement to make.
Yeah, I totally ridiculous. But even economists make that. I mean, well, who knows where son of Aristotle learned that from? Probably some stupid economist. But I probably shouldn't have used the word stupid, but because I'm about to say something that I hear a lot of people say, and that is, it was the spending that caused the inflation. And while the spending played a role, it would not have caused inflation if the Fed hadn't printed the money to pay for it. That's the thing. It's because if you think of government spending,
Right.
all they either tax it from us or they borrow it from us, one way or another. But that means I don't have it anymore. If I buy a T-bill or I pay my taxes, I don't have it, they got it. Then they give it to somebody else. And so I don't have the money, somebody else does. There's no more money in the economy. The deficits do not increase the money supply unless the Fed buys the bonds. And that's why Jerome Powell is so wrong about this was wrong about it being transitory inflation and all of that. And so this is why it's just mixed up, because government shouldn't have grown. We should have never done what we did during COVID. Bush should have never agreed to TARP. It's like it's '08 and COVID. I show us in my speeches these days, I show the spending increase during the Great Society. Johnson, Nixon, Ford, and Carter, the four horsemen of the apocalypse. All right. It was just awful. And then we flattened out with Reagan and Clinton. And then under Bush and Obama and Trump and Biden, spending went up this way again. But we never did. You could call the Green New Deal close to the Great Society, but that was only part of it. It was just two crises. And the way we dealt with the crises is we printed money and spent. And the result of that is $3,800 gold.
Yeah.
And
I'd like to respond to son of Aristotle too. In June of 2021, CPI printed 5.1%. The housing market was inarguably on fire. You could see signs of that everywhere. That's when he gave his transitory speech, hit the gas, kept buying bonds, particularly mortgage backs, for about the next 9 to 10 months, I believe. Mm-hmm. So my question then, first of all, there's no debate about whether or not Jerome Powell facilitated the inflation. He did facilitate the inflation. Those other guys have some responsibility as well. But my question to you about this, Brian, is that let's say by July, Jerome Powell, let's say he wasn't an idiot. Let's say he had the intellect of Brian Westbury. And you said, okay, we got to hit the brakes now and stop creating money because things are getting a little out of hand. Could we have sidestepped this whole inflationary nightmare, or at least half of it?
Well, I don't know. Not by the time you just mentioned. By the time we were into 21, it was too late, because they had used the QE to fund all the payments to individuals. I mean, we were direct depositing money into people's bank accounts, and the PPP loans. And so that's why M2 exploded. If you made me head of the Fed, I might try to take us back to the gold standard, but really what I would really do is get rid of all these excess reserves and go back to a scarce reserve model and bring banks back into the process of determining what short-term interest rates should be, because right now we don't have that. And so the Fed has divorced itself. Scott Bessent wrote an editorial in the Wall Street Journal the other day, and he called it the gain of function Fed. And so his analogy was pretty simple. The COVID came from gain of function research. We took a virus and we made it worse, right? Well, they took a monetary policy and they tried to gain function. They tried to give themselves more degrees of freedom, more power, and they ended up wrecking the whole thing. I mean, they wrecked everything because they did that. And that's why we need to go back and get rid of that those extra functions, because all they've done is grown the Fed's power, and it's got mission creep now. By the way, this whole idea of Federal Reserve um, reform, I think the country may be ready for something like that. Like, let's get rid of the regional banks. Like, you know.
Okay, Bobby, you got anything last word?
Yeah, I just want to put up Widget's comment because I think it's pretty insightful. The asset bubbles wouldn't worry me if not for my fear of how the government will respond to any implosion. We've got an entrenched moral hazard problem. I couldn't agree more with that. I mean,
100%.
this, you take it all the way back to GM back in the financial crisis, or even further back than that. We don't see Edsels on the road anymore. I don't know why it would have been so bad. It would have been pain, but it would have been over quicker, and it would have been much more stable.
By the way, I was for the bank bailouts. I'll make a confession to you guys. And my reasoning was this, is that I believe the banks were in the precarious spot they were because the government had held their hands in this unholy partnership for decades, leaned them over the cliff. I thought it would have been a kind of a bad time to like, hey, you guys are on your own now. So I was for the bank bailouts, but I was for nothing other than that. Do you think I'm a sellout, Brian, for being for the bank bailout?
A Nuremberg defense there, Jimmy?
I don't think you're a sellout, but I wrote a book about this. That's not trying to make
your book.
That's not trying to. Well, it was 2009, but what I learned in all my research of writing that book is that if we would not have had mark-to-market accounting, the crisis never would have gotten out of control. And I'll give you just two quick pieces of evidence, if you will. Go early 80s, Reagan wins, the whole S&L industry was bankrupt, negative net capital. Then Latin America defaulted. Every money center bank was bankrupt, every single one. But we didn't mark anybody to market. We worked our way through the problem over a decade. In the 08 crisis, we marked everybody to market in an illiquid market, which took a $500 billion, $400 billion problem, turned it into a $5 trillion problem. And by the way, when we did TARP, that was October of 08, and the market went down another 40%, even after TARP. Then we changed mark-to-market accounting on March 9th, 2009, and that's when the crisis was over. And so that's my only argument, is that and Bush even said it. He came out and said, I had to violate free market principles to save the free market. And that proves it to me. It was just the wrong thing to do.
Bobby?
And so I understand supporting it at the time.
Yeah.
But yeah.
I don't agree. The thing that I don't agree, Jimmy, and this is all I wanted to say, and this is it from me, is that you can't bail people out and then not have anyone go to jail of any substance, to me, because they did say we're going to hold your hand, but it's literally like, look back to the days of the mafia. The bars that sold the illegal liquor got arrested, even though they were supposed to be protected by the mob during Prohibition. And it's a Nuremberg defense in some ways.
But it's also like Repo 105 was legal, and it was the most absurd thing on the planet, but it was legal. Swapping out your treasury, your bullshit collateralized debt obligations with AAA rated treasuries for when the regulators look. So that stuff was legal. But I mean, I wanted someone to go to jail too, but I just cannot figure out who. Let's call it here. Is that okay, Brian? You got any last word?
I don't. It's been great to be with you guys. It always is.
Appreciate it. By the way, did you put a jacket on for us? Did you forget who we were?
Hey, right at the very beginning in the introduction in those boxes, you guys are wearing jackets. I do want you to know.
Okay. Hey, Brian, why don't you really quickly tell people the name of that book in case they want to pick it up?
Yeah. In 2009, I mean, remember how negative everybody was. I mean, every day, zero hedge. For 5 years, zero hedge. Every day said the world's going to come to an end. I wrote, the title of my book was "It's Not as Bad as You Think." And I feel pretty good about that title, because we started the market started going up in March of 2009, and it still hasn't looked back.
Yeah. That's amazing. But find Brian on Twitter at Westbury, WESBURY. I'm sure all you guys follow him anyway already. But dude, Brian puts out great stuff. Again, when I say that I think you're top of the heap of economists. I mean that. And you've been right about so many things over the last 20 years and taken some criticism as you said it, which I'm sure you did when you wrote that book too. So keep up the good work. It is amazing. I am Jim Iuorio. That's Bob Iaccino. This is The Trader's Edge. Also, please join us at unfilteredinvestor.com, where we take some of these topics we talk about and talk about into actual trading strategies and more granular sort of thinking. But anyway, thank you for joining us on The Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.